iFinance has raised $30 million in debt funding from FMO, the Dutch Entrepreneurial Development Bank. The proceedings from this funding, around 250 crore rupees in local currency, will be used to further I's mission of financial inclusion by extending loans to underserved micro, small and medium enterprises across India. Joining me now to discuss the fund allocation plan and its growth blueprint is Sanjay Sharma, the co-founder of iFinance. Sanjay, it's great to have you back on the show with us on Startup Street. First, let's take a look at the numbers that you've reported, right? iFinance reported its profit after tax of 161 crore rupees versus 57 crore rupees in the previous fiscal. You also saw a big jump in your revenues of 67% for FY24. If you could elaborate on what led to this big growth in profits, what's working for the company, and where do you hope to close this year? How is the quarter growth looking like?
Sure. Thank you for having me on the show, and good evening. Last year has been a wonderful year, and I think we have moved very actively forward in our mission to provide funding to unorganized micro enterprises and therefore create employment opportunities across India, in the hinterlands of India or Bharat. Last year has been a wonderful year because a lot of things that we have done on automation, in moving costs down, getting our unit economics to work better, have worked for us, and that's the reason that our revenue has grown almost 67% over the year, and it has become 1,070 crores of revenue. And of that, the profit has been about 161 crores. These are great numbers, and I think the money that we have raised recently from FMO, the Dutch finance institution, of 30 million or 250 crores, and we also raised some equity sometime back in November, December, which was another 37 million, and about 310 crores. These are funds that will go straight away into deployment for growth. We continue to grow rapidly. There's a lot of demand in the market, and I think the coming year will see us improve our profits further and improve our unit dynamics a lot more.
Right. So you'll see your profits only improve going forward. But, iFinance's assets under management increased 4,004 crore rupees from 2,700 crore rupees in FY23. You've also managed to keep your net NPA under 1%, right? So how many loans did you disperse, and what kind of loan book growth target do you have for FY25? Are there any pockets where you're seeing stronger credit demand?
Sure. I think we have an active base of about 480,000 customers or loans. And since our inception 10 years back, we have given loans to more than 9 lakh customers. We have disbursed close to 10,000 crores during this period. So there's a fair amount of funds that we have channeled to the excluded micro enterprises. And I think we continue to do a fair amount of business. We do almost close to 40,000 loans in a single month across the 22 states that we are present in. So our presence is across India. And this business will continue to grow that way because there's a very large unmet demand from micro enterprises across India. And this is a segment that provides employment to a majority of non-agricultural positions. So I believe that this is something that we'll see evolve further in the next 5 to 10 years.
Sure. And, you just recently raised funds in December, and now you've raised about $30 million in debt funding. So this is, your second fundraise in 6 months, right? So why did you need these funds? Where will the funds go primarily?
Yeah, I think it's the growth in our portfolio. And you mentioned that from 2,700 crores, we have taken our portfolio to 4,500 crores today. And by the end of the year, we will be talking of close to 6,500 crores. So we are going to build another 2,000 crores further from here. And this 250 crores of debt and the 310 crores of equity that we raise are parts of that funding of our growth. So we will be raising more debt as the year progresses. That's the plan.
All right. So you will be raising more debt as the year progresses. Sanjay, we're completely out of time, but thank you so much for taking time out and being on our show here today.
Thank you very much.